The past year, one tax has been shouted from every podium in America. You were told it would save the economy. You were told other countries would pay it. Then the Supreme Court ruled most of it was never legal to collect. And nobody ever explained how it works. The tax is called a tariff. This is exactly how it works. That money started as a piece of paper at a port. When a shipment reaches America, a form has to be filed before anyone is allowed to open the box. The government reads that form, applies a percentage, and sends a bill. The box does not move until that bill is paid, so somebody writes that check. It comes from the American company that ordered the box. The one whose name is on that form. The law calls it the importer of record, and it is the one that pays. That company bought the shoes in your wardrobe and the phone on your table. Most people think China pays this. That is the first thing people get wrong. And it is why the $166 billion is going back to American businesses. They are the ones who paid it. So why do it at all? The reason was written down. In April of 2025, the President of the United States signed an order, and the order explained itself. America was buying far more from other countries than it sold to them, year after year. The word used was reciprocity. Plenty of economists disagreed with the reasoning, and through 2025, the goods gap actually grew. I'm not going to tell you what that proves. But the bills kept arriving, and every one of them landed on a company that had to decide what to do with it. There are 3 things a business can do with a bill like that, and only 3. It can pay it out of its own profit and leave its prices alone. It can add it to the price and let the customer carry it. Or it can find a supplier in a country that is not being taxed, which takes months, and sometimes there isn't one. Most companies do a bit of all 3, but those doors are not equally open. A very large company can swallow a tariff for a year. It has other products, other countries, and enough profit to sit on the cost until something changes. A small importer usually cannot. When a business makes 4 cents of profit on every dollar it sells, and a bill arrives for 10 cents, there is nothing to absorb it with. Which is why the same tariff does not land the same way on 2 shops selling the same thing. It goes on the price. It almost always goes on the price. And this is where you have to be careful, because prices move for a lot of reasons at once. Coffee in America got much more expensive over the last 2 years. Some of that was tariffs. A lot of it was bad weather in the countries that grow it, which pushed the world price up before any tariff existed. So a tariff is rarely the whole story on any one thing you buy. It sits on top of the story. But it sits on top of almost everything. So what did that cost you? Right now, with most of those tariffs struck down, the estimate is about $900 a year for an average American household, about $75 a month. At the peak, before the ruling, it was estimated at well over $1,000. And here's the thing about that money. You already paid it. Not as a tax, not on a form, not with your name on it. You paid it in small amounts, at a till, on things you did not know had crossed a border. Nobody ever sent you a bill. That is the second thing people get wrong. There is an obvious objection here, and it deserves a straight answer. Surely the foreign seller eats some of this. They drop their price to keep the order, and the cost gets shared. Economists measured it on the 2018 round of tariffs. In most industries, almost none of it was absorbed abroad. What American buyers paid went up by very close to the full amount of the tariff. Steel was the exception. There, foreign sellers really did cut their prices. Everywhere else, the bill stayed home. So look at what we have got. An American company pays. American shoppers carry it. The money goes to the American government. And when the court says no, it goes back to Americans. From end to end, this is one country taxing itself. And yet, on the days these were announced, currencies moved in countries that had nothing to do with it. Central banks that had never bought a single American product held emergency meetings. So why did anyone else care? A factory in one country sells to a buyer in another. Neither of them is American. Neither of them ships a single thing to an American port. And in the same week, that factory's costs changed. To understand why, you have to look at the piece of paper between those two companies, not the customs form, the invoice. America is about a quarter of the world economy, $32 trillion out of 126. That is a lot. It is not most of it. Now count the money every country keeps in reserve, the savings a nation holds for a bad year. That pile is about $12 trillion. $7 trillion of it is US dollars. And more than half of all the trade on Earth is billed in dollars, including trade where nobody involved is American. So the dollar is roughly twice as big in the world as America is. This was set up on purpose once. After the Second World War, most countries agreed to tie their money to the dollar, and the dollar was tied to gold. A country holding dollars could in principle ask America for the metal. That ended in 1971. America stopped handing over gold, and the link was cut. Here's what did not happen next. The world did not go back to using its own currencies with each other. Brazil kept billing Japan in dollars. It still does. Nobody re-signed anything. The habit outlived the reason for it. But why the dollar? Why not the pound or something neutral? Because by the end of the war, America was holding about 2/3 of all the gold on Earth. Everyone else had spent theirs on the fighting. And here is the part almost nobody knows. Britain came to that meeting with a different plan. Not the pound either. A currency that belonged to no country at all. Issued for trade and owned by nobody. It lost. Not because it was a bad idea. Because the country holding the gold was the one setting the terms. Remember that because it comes back at the end. And one thing holds that habit in place better than any agreement could. Every country needs energy. Almost none of them make enough of their own. And the world price of oil is quoted in dollars. Not because a law says so, because that is how the market has always been written. So before a country can buy the one thing it cannot do without, it has to hold a currency it does not print. Every nation on Earth stands in that queue. And the queue takes dollars. For 7 minutes, I have been telling you this is one country taxing itself. That is true. And it is exactly why the rest of the world flinched. Because if a tax that never leaves America can move prices in countries that never trade with America, then the tariff was never the lever. The lever is underneath it, and it is that invoice. Almost every price on Earth is quoted in one country's money. And that country never had to ask anyone's permission for it. Think about what that is worth. When any other country wants to buy oil, ships, or grain, it has to get dollars first. It has to sell something to somebody to earn them. America skips that step. It pays in the money it issues. And it gets better. The world sends America real things, oil, ships, grain, and America sends back dollars. Then the world lends most of those dollars straight back to the American government, at a lower interest rate than anyone else gets. Now the other side. Say a country borrows in dollars because dollars are what lenders will lend. Then something happens in Washington that has nothing to do with that country, and the dollar gets stronger. Its debt did not grow. The money it owes got more expensive. It now needs more of its own currency to pay the same loan, so it cuts something at home to find the difference. A road, a hospital, a subsidy on food. Nothing in that country changed. The score is just kept in someone else's money. Then, in February of 2022, something happened that every central bank on Earth wrote down. After Russia invaded Ukraine, the United States and its allies blocked Russia's central bank from touching its own foreign reserves. About $300 billion of them. The money still existed. It simply could not be used. I am not going to tell you whether that was the right call. Honest people argue about it, and that is a different film. What matters here is narrower. Every other central bank learned the same fact on the same day. Reserves held in someone else's system are held on that system's terms. If you're enjoying this, a quick subscribe means you won't miss the next one. Now, back to it. Plenty of countries have tried to get out from under this, and not quietly. There have been summits about it, agreements signed about it, whole trading systems built to avoid it. And it is working. It is just very slow. 25 years ago, the dollar was about 70% of world reserves. Now it is 57. That is a real fall. And it took a quarter of a century. China's currency, from the second largest economy on Earth, is about 2%, roughly $240 billion out of $12 trillion. A currency that wants this job needs three things, and they are demanding. It has to be sellable instantly in enormous size at 4 in the morning to a stranger on the other side of the world. It needs courts that will rule against their own government when a foreigner's in the right. Otherwise, the savings are only safe until that government decides otherwise. And here's the strange one. The country that issues it has to be willing to buy more from the world than it sells. Forever. That is the only way everyone else gets enough of the currency to use it. Not many countries want that job. Because a currency is not really a thing. It is an agreement about which thing everybody will use. It works like a language. English is not a better language than Portuguese. It is more useful in an airport, and only because of who else speaks it. So a country that starts pricing its exports in its own money has not freed itself. It has made itself harder to trade with. Whoever goes first pays for it, which is why nobody goes first. They would have to leave together. And that is being built piece by piece very slowly. That is the third thing people get wrong. Nobody is choosing this every morning. They are just not paying to leave. So, back to that stamp we started with. A tariff was announced. The money was collected from American companies. A court said it should not have been, and it is going back to American companies. On its own terms, almost none of that involves the rest of the world. And the rest of the world felt it anyway, because for a few weeks it lit up the plumbing that everybody uses and nobody talks about. The tariff was not a lever. It was a flashlight. There is one loose thread here, and it is a big one. Everything you just watched runs on an agreement. Not a law, not a treaty, not gold in a vault. Countries that do not like each other, that agree on nothing else, all quietly agreeing to count in the same units. Take that agreement away and the paper does nothing at all. Which is a strange thing to notice about the thing you work all week to get. So before we go anywhere else, what is money actually? Not what it buys. What it is. If you like this one, hit like and subscribe. Got a topic you want us to break down? Drop it in the comments. We're here to answer the simple question behind everything. Why money?